So many people looking to buy a home currently are waiting or even hoping that there will be a crash in the housing market. They're hoping to see the prices drop 10, 20, even 30%, or at best, get back to the levels they were pre-pandemic. I can totally understand this thought process. As you're in this position, you're just looking to buy the best house for the most affordable option for you and your family. But what about Virginia Beach? Are we about to see a housing market crash? Should you buy now, or should you continue to wait it out? Well, if you're asking those questions, in this video, that's exactly what we're going to discuss, as there's really two sides of the fence on this topic. You have those in the news media and other people who are telling you every day the market is crashing, the housing prices are going to drop as the bubble is going to burst, just like it did in 2008.
Impending doom.
Then you have other people on the other side of the fence who maybe work in real estate or are real estate professionals that I talk to every day. They want to tell you, don't worry, nothing's wrong with the market. This is perfectly normal.
Don't despair.
So what is the truth about the housing market? Especially here in Virginia Beach. Are we going to have a market crash? Should you continue to wait? Well, let's get right into it. So I want you to be able to make the most informed decision about whether you should buy now or continue to wait. In order to do that, before we get into the pros and cons of each of those decisions, I wanted to share with you some information on the landscape of the national housing market, as well as get the opinions of some subject matter experts in this area. Then we're going to look at some data that's focused strictly on the Virginia Beach housing market so you can make that decision for yourself. According to a recent report published by the National Association of Realtors, existing home sales in September of this year was down 1.5% versus the prior month. Versus last year, it was actually down close to 24%. Unfortunately, that decline continued a streak of 8 months in a row of declines, and that streak was the longest since 2007. As I'm sure you're keenly aware, the inflation rates in our country continue to rise to levels we haven't seen in over 40 years. In an effort to reverse this trend, the Fed has made several rate hikes to the borrowing interest rate. That in turn has caused the mortgage rates to increase to levels we haven't seen in over 20 years. This has caused many potential homebuyers to not only be worried, but many have made the difficult decision to forgo purchasing a house at this time. As Fannie Mae is reporting, home mortgage applications are at the lowest levels we've seen since 1997. So with those facts in mind, let's take a look at what the subject matter experts feel this will mean for the national housing market going into the future. First, we're going to take a look at some of the views of those who think the market is in for a big decline. Mr. Jeremy Siegel, he is an economist and a professor at the Wharton School of Business in the University of Pennsylvania. He is saying the prices are going to drop 10 to 15%. Additionally, he feels in the next 12 months, the market is going to see the second largest correction since the post-World War II era. Mr. Mark Zandi, chief economist at Moody Analytics, he feels the market's going to drop 10%. Additionally, he says if there is a typical recession, he feels the market actually could drop to 20%. Mr. David Rosenberg is a chief economist. He feels the market is currently sitting on a huge housing bubble. Well, based on those opinions, one would have to think the market is definitely primed to head south. Well, not all the experts agree that the market is going to crash. Dave Ramsey is a national radio host and financial advisor, and he has actually listed quite a few reasons why he feels the market is not crashing. Dave Ramsey uses the word perspective when listing why he feels the market isn't in for a crash. He mentions how in 2020, the market was up over 29% on median house prices. What caused this? COVID-19, of course, as many homeowners were forced to work from home. Also, their children were forced to do schooling from home. This also caused a shortage in lumber, as many lumber facilities and other building supply facilities were closed down. Therefore, new construction builds were put on hold, and that caused a shortage on inventory. Also, if you remember, at the beginning of the pandemic, there was a moratorium on foreclosures. While foreclosures aren't something a lot of people want to talk about, that does supply the market with housing, as there are foreclosures that come on the market quite frequently during normal times. Not only was there a shortage of inventory, but there was a huge influx of buyers, homeowners who were looking to increase their house size, looking to get into a new house. So there was a big supply and demand issue, as there was more buyers than there was potential sellers. Prices were higher than we had ever seen before. Buyers were paying way over asking price. They were paying out of pocket over appraised value. This caused the prices to go higher than they really should. However, Dave Ramsey mentions how Fannie Mae is still projecting median home prices this year to end up 8%. Next year, Fannie Mae is projecting home prices to be up 3 to 5%. He also mentions how in the early 80s, interest rates were up 16, 17%. While they were a lot higher than they are currently, he mentions how even with those high rates, of course, it slowed the amount of houses that were being sold, but it didn't necessarily lower the pricing of housing. Bankrate recently published an article on whether they felt the housing market was going to crash. Their economist listed 5 reasons why they felt the market wasn't going to crash. But their number one reason why they felt it wasn't going to crash was the fact that inventory levels are still at record lows. Everybody mentions 2008, the last time the market crashed. Well, Bankrate mentions that in 2008, the lending standards were not near as strict as they are right now, as there was many subprime mortgages. They mention the fact that there aren't as near as many foreclosures on the market right now. One of the causes that a lot of homeowners, while there was the moratorium, they now have a lot of equity in their houses as well. So even if they're behind on the mortgages, they're able to work out deals with their banks and refinance that loan. So what does all that information mean for you on whether you should buy now or continuing to hold out? Before we get into those pros and cons, let's dive further into the housing market, but focus specifically on Virginia Beach. I wanted to thank you for watching this video. If you're enjoying it, please hit that like and subscribe button below. Also, if you're still on the fence about whether you should buy now or wait, I want to help you make that decision. I'm a realtor. I'd love to discuss your options with you so you can make that most informed decision about what's best for you. As it sits right now, the average 30-year fixed mortgage is right around 7.7%. The VA loan, 30-year fixed, is right around 7.4%. Here in Virginia Beach, that definitely has caused some potential home buyers to halt their buying activities, as the amount of houses sold during the latest few months has definitely been on the decline. That doesn't mean it's necessarily affected the median house prices, nor do I think interest rates are the only thing that's slowing down this market in the amount of houses sold. So we're going to take a look at some different metrics using our local MLS, which is the Real Estate Information Network. The first chart here I'm going to show you is the settled home sales. The amount of homes being sold has definitely gone down over the last few months. As far as October goes versus the prior month, it was actually down 33%. Versus a year ago, it was down 45.8%. One thing I want to call out here before we move on to the other metrics is while it is down in settled sales, if you look at this graph in prior years, take a look at when they also see a dip in the amount of settled sales, and it usually coincides with the fall and winter time. Similar to other markets across the country, spring and early summer tend to be the hottest time as more and more people are looking to buy homes during that time. Next chart I wanted to show you was the amount of active listings here in Virginia Beach. Currently in Virginia Beach for the month of October, it's just a tad above 800 with the amount of active listings. That actually is up 1% versus the previous month, but it is down 14% versus a year ago. There is definitely a decline in the amount of active listings. If you look historically, you will see, similar to settled sales, there is normally a decline during the end of quarter 3 into quarter 4. We're going to further get into price. There is going to be a supply issue. Whenever there is a supply issue with supply and demand, when there is less supply, price tends to go up. The next chart is the current months of supply. So currently in October, there's 1.8 months of supply. So what that is saying is that currently, as today sits, if there was no other houses to come on the market, it would take exactly 1.8 months to sell all the active listings. What I will tell you, looking at this chart historically, as I was talking about supply and demand, 1.8 is still very, very low for inventory. All right, so this next chart I'm going to show you is strictly on price. That is the median sales price. Here in Virginia Beach, it's actually right at $330,000. Amount of houses sold has declined due to many factors such as interest rates and seasonality. However, it hasn't necessarily affected the price of homes. As versus a month ago, it's actually flat in Virginia Beach, and versus a year ago, house prices are still up 6.5% in the month of October. So I guess what I'm saying here is while I don't know what's going to happen in the future, to me it's pretty clear to see that yes, the amount of houses being sold has slowed down due to many factors. I'm not sure the prices of houses have followed suit, nor will they follow suit. So we've reviewed the data on the housing market both nationally and locally here in Virginia Beach. We've heard from some subject matter experts and what their opinion is of the current housing market and whether or not it's going to crash. So should you buy now or continue to wait? What are the pros and cons of each? So if you're thinking about waiting on buying a home, you're probably hoping to yourself that both the interest rates and the house prices will go down over time. Unfortunately, historically, that thinking doesn't hold out, as typically, as inflation goes up, interest rates rise as well. Let's say you are right and interest rates go down. Well, historically, as interest rates go down, that causes an influx in buyers getting into the market. Therefore, home prices tend to increase. With all that said, I can't tell you what's going to happen, but let's take a look at the pros of waiting it out. There is a potential the market crashes. Housing prices go down, and maybe even interest rates go down. But as we just previously discussed, that's not likely. Okay, so maybe you're not lucky to get both interest rates going down and prices going down at the same time. Maybe inflation doesn't get in line and interest rates continue to go up. Well, as interest rates continue to go up, that usually brings the prices of houses down. So maybe as the rate goes up, prices will fall. Another pro we really haven't talked much about is rent. So with mortgage rates currently increasing, your rent payment might actually be less than buying a home and your mortgage payment. So you might actually be saving some money by waiting, and the fact that you're not going to be paying as much in mortgage. Using rates we discussed earlier, if you're looking at a $350,000 house, before you even factor in taxes and insurance, your mortgage payment's going to be around $2,500 a month. So what are some of the cons of deciding to wait and not buy now? Well, the first one would just be the simple fact if you're paying a rent, you're paying someone else's mortgage. Using the prior example of $2,000 rent payment, that's $24,000 a year that potentially could be going to paying down your principal balance. Another con of waiting, let's say you have your down payment sitting in the bank. Let's say, for instance, you have $100,000 in the bank just sitting there. Well, due to inflation being around 8% as it is currently, just sitting in the bank, it's actually losing $8,000 a year. That's money again that could be going down to your principal balance, working for you, versus losing money sitting in an account. Another con of waiting, God forbid, rates continue to go up and prices continue to go up. So this dilemma has actually affected many of my clients over the last few years. To give you an example, I actually have a client I met in 2020. We put an offer on a house for $300,000. Unfortunately, we were outbid. We actually ended up putting several other offers on houses as well. They were outbid. Rightfully so, my clients got very discouraged. What they decided to do at that time, sit it out, let the market run its course, and hope the market and prices would go down. Well, fast forward 2 years later, they're actually forced to purchase a home due to conditions that they had no control over. That house right now, based on price increases, would actually be selling for $387,000. Let's say they were able to get the house they wanted for $300,000. Their mortgage payment back in 2020 for that $300,000 house would be $1,432. At today's rates, if they're able to find a house for $300,000, their mortgage payment each month is going to be $2,139. That's almost a difference of $700 a month, just simply because, unfortunately, they waited the market out. There are other additional pros and cons that is unique to each individual person's situation. Ultimately, you have to make the best decision for you in deciding and what's best for you and your family. As far as my personal opinion on the market goes, I don't feel the market is crashing anytime soon. Additionally, I don't feel the market is perfect either. I think it's more a matter of the market is correcting right now based on the last few years of anomalies that were caused by COVID. I also feel some of the stuff we're seeing is more just a matter of the time of year. Ultimately, I think you need to do your research. I also think you need to speak to a real estate professional, speak to multiple real estate professionals so you can get their advice. If you'd like my advice on what's going on in the market, my contact information is right over here below. Love to hear from you so we can discuss that further. Lastly, if you're curious about more information on Virginia Beach, take a look at this video I did here. And until the next time, we'll see you on the next video.